Steve Watts is the newly appointed SAP Asia Pac plus Japan president and joins us from Singapore today. Steve, good morning to you. You seem to be doing a lot better than the company as a whole. Why?
Thanks, Bernie. Solid performance across the emerging markets in particular. So we saw very good growth across China, India, Southeast Asia. Very, very solid performance across those emerging markets.
Were you profitable? I have a figure of euros, 1.144 billion, which is the common currency which SAP reckons in, but we didn't get a bottom line with the press release. How was the bottom line? Or if you want to give me maybe EBIT or op earnings, maybe that would be a little more appropriate.
Yeah, solid, Bernie. We haven't broken that out across the market as yet, and we will do so shortly. But solid bottom line growth as well. Very, very good result, top and bottom. And likewise, as we look to 2010, feeling positive about both top and bottom.
What were the drivers here? What kind of industries? Are we talking a bounce back in finance, or was the action elsewhere?
No. We still saw the export-dependent industries were still down. What we saw were public sector, utilities, some of those service-based industries, and in particular any industries that were driven internally without the demand on exports were very, very strong for us. Clear winner was utilities. Big play across the region.
Why utilities? Just out of curiosity, are they in dire need of upgrades, or as they go greener, as they change the input and the components of what powers their grid, does that necessitate change, which brings you into play?
Multiple items. Clearly, as you look at some of the fast growth markets, China, India, you're seeing continued rollout across infrastructures. Likewise, you're seeing the same in Vietnam and some of the countries in Thailand and Southeast Asia. Continued then focus on sustainability in some of the more mature markets like Australia, Japan.
How much are you spending in Asia? Because as a whole, the company has been looking to basically offset a drop in the number of large contracts of late, and you've been cutting costs and targeting operating margins at around 30%. Down from 27% in 2009. Are you operating on those metrics, and far from cutting costs, you're actually spending on both hardware and software, people and fixed plant machinery here?
Yeah, we're seeing a balanced portfolio. We're certainly investing appropriately. In other areas, we're being very sensible. If you look across the broad market today, we are still in investment mode. Clearly, markets like China and India take more of the investment than some of the more mature countries where we continue to scale. We're not short on headcount. We're not short on marketing spend. We're not short on investment, Bernie, at all.
How much of the, as we've been talking through the earnings season about the rollouts here, one of the things which was apparent was there was a considerable take-up of the Win 7 operating system at the consumer level. The corporate migration is going to take a little more time because it involves a lot more people and a lot more sprawling networks and apps. But what kind of, what sort of buzz did you get from a new operating system and all the stuff that's going out in the tech space that I don't need to repeat for you here about what people are paying attention to? How much of that is actually spilling over into increased attention to SAP software? Minimal,
desktop minimal, Bernie. What we are seeing, however, is a greater focus on TCO. So what we're seeing is a much greater focus and a standardization and a rationalization across the number of IT business partners that companies have. But the operating system per se and 7 hitting the market has not had a material impact on our business. But certainly what we are seeing is a consolidation across the market of the number of key business partners that our major clients are working with.
Are you happy with the size of the company in the Asia Pac Japan, or does the company have some missing parts of the puzzle that need to be completed? In other words, are there companies out there that might fit in the fold, and for the right price you might be willing to take under your wing?
Oh, Bernie, it wouldn't be a conversation with you without asking some M&A activity, I suppose. We're always open, and it will always be part of the mix. And I'm open to suggestions. I'll happily refer you to John Schwartz so we can have the chat.
Okay. It wouldn't be a conversation without you telling me that you're always on the lookout and that the right price, the right deal can be made. Do tell me about Oracle and how much, now that you're charged with the helming SAP in Asia, how much of an enemy do you want to make out of Oracle?
Look, Bernie, that's not my style, and it's not SAP style, to be honest. We'll go about our business and we'll do our business. They're a good competitor of ours. They're a good company. They're not us. They have quite a different value set to who we are. They have quite a different value proposition. I wish them no ill as people and no ill as a company, but we'll get on with our business and we'll continue to service our customers the right way.
Let's all make love, not war. Steve, thanks for the FaceTime. Best of luck in the current quarter. Steve Watts, Asia Pac plus Japan President for SAP AG.